Okay, now let's calculate the equity section. Okay, equity section, this is total assets section. Now the equity section, okay, we can see that first one is a capital. The capital value is around 20,000. So 20,000, okay, capital value. Then you have the net profit. So let's calculate the net profit. Okay, net profit, let's calculate. So here we had two of them. Okay, one was 41,800 and the other one is at a loss of 19,000. So the net profit we can find. So 41,800 minus 19,000. Okay, so that is going to be your net profit. Okay, for both the departments put together. So that is going to be equal to 22,800. So this is going to be equal to 22,800. Then you have less drawings. Okay, you have to do, so capital plus net profit, and then you will have to do less drawings. So the drawings is around 19,100. Okay, the drawings is around 19,100. Now let's calculate 20 plus 22,800. Okay, minus 19,100, that is 23,700. So that is equal to 23,700. Now let's calculate the non-current liabilities. Okay, these are the things. Then we can see that there are no non-current, okay, so liabilities. So there are no non-current liabilities. We have just the current liabilities. Okay, so non-current liabilities, there is no bank loan or anything here. So there is no non-current liability. Okay, now you have the current liabilities. Current liabilities are going to be equal to trade payables. Trade payables. Trade payables. And then you have the bank overdraft. And other payables. Okay, those are the current liabilities. So trade payables was around, okay, was around 41,000. So let's write it here. So 41,000. Then you have bank overdraft, which we had calculated after adjustments. It was 37,800. Okay, 37,800. And other payables. What are the other payables going to be equal to? Anything that was, okay, outstanding, like expense accrued. Okay, expense accrued is an other payable. rent accrued. Okay, it becomes other payable, so the value is around 2000. The rent had got accrued, it's immediately you have to pay in this year, it is 2000. So these are the things. Now let's calculate the value. So 41,000 plus 38,800 plus 2000, so that is going to be equal to, the total is going to be equal to 8,800. 8,800. Now let's add up, okay, these two, equity plus the total liabilities, okay, the total liabilities, so that is going to be equal to equity plus the total liabilities. Okay, let's add up these two, plus the total liabilities, 23,700 plus 8,800, so that is going to be 104,500. So we can see that both have got balanced. The total assets must be equal to total equity plus liabilities.